Well, let's get straight to earnings then. In Glenmark Pharma, that stock is trading well in the green, though it's come off the high point of the day. The Q1 numbers were quite impressive. Sonal joins in to fill us in with all those details. Sonal.
Thanks a lot for that. And yes, as you rightly pointed out, good set of numbers reported by Glenmark Pharma. Revenues were up 1% versus an expectation of 2.5%. But if we look at the operational performance, it was very strong. EBITDA 40% at almost 370 crore rupees, which was much higher than expectations. And margin was a big beat at 20.6%. There was an expectation that margins will be flattish on a YY basis. Accordingly, profit growth is also strong at 133%. And what led to muted revenue growth this time around was the LATAM region and also the rest of the world markets, where revenues declined 18%. Apart from that, growth across segments was quite decent, and in its own con call, the company said that they did see some price erosion in their dermatology portfolio, which is big for them. In fact, they saw around 15% price erosion across this portfolio, but they did say that for the US markets, they expect sales to improve on a quarter-on-quarter basis going ahead, and this is something that they expect for the API segment as well. It was the cost rationalization that led to better margins, and they say that this will continue, and by the end of this year they expect EBITDA margins to be around that 19 to 20% level mark. So they are maintaining the level of margins that they did in Q1. The stock also has valuation support, is trading at 12.2 times FY22 EPS, which is much cheaper than the sector peers that are trading at around 25 to 30 times. So the stock is doing well on the back of good numbers and also cheap valuations.
All right, thanks a lot for that, Sonal. Good numbers and cheap valuations takes Glenmark higher, but bad numbers, cheap valuations and good triggers takes Sun TV higher in today's trading session. The stock's higher despite weak results because the street is focusing on one, good management commentary, second, valuation support, and thirdly, this quarter will also have the IPL, so that should support their numbers. Nupur joins in with the details. Nupur.
The stock is reacting positively on strong management commentary. Numbers were weak in Q1 on the known fact of lockdown as well as slowdown in economy. Ad revenues down 67%, but subscription revenues up 18% in line with expectations. As a result, total revenues down 44% and profits down 26%. But you remember, base quarter had IPL as well as movie business revenues. But management commentary, as I said, is extremely positive. They are seeing ad revenues coming back to 80% of pre-COVID levels. There is a huge pent-up demand. Festive season will add further to ad revenues, and IPL revenue will come in the second quarter as well as in the third quarter of FY21. Subscription revenue could be better in FY21, so extremely positive commentary coming in from the management. Brokerages have a buy rating on the stock with the target price anywhere between 480 to 500 per share. On valuation support, stock trades at multi-year low valuations of just 10 times FY22 expected earnings. Back to you.